Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm John Hageman, Sales Team Manager for Massey Knakal. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, Chairman of Massey Knakal, and we're going to talk about the first quarter sales activity in New York City. So Bob, tell us what the first quarter looks like so far.
Hags, the investment sales market in New York City in the first quarter of 2014 couldn't possibly be any better. Property values are soaring, and we're approaching all-time records in terms of the volume of sales, both in terms of dollar volume and the number of properties sold.
So Bob, tell us, what does the dollar volume look like in the first quarter?
In the first quarter of 2014, there were $13.3 billion of investment sales activity. That's the best quarterly total we've had going back to the $20 billion that occurred in the first quarter of 2007. If we annualize that $13.3 billion, we're running at a rate of about $53 billion for the year, which wouldn't be quite the $62 billion record we had in 2007. But it's important to remember that the first quarter of the year is usually the most muted quarter. So we believe that as activity picks up throughout the year, we will see an annual total that will surpass the $62 billion that we had in 2007. Also, if we achieve the $53.1 billion that we're on pace for, we will be about 39% higher than the $38 billion that occurred last year. So all indications are we're on a very, very good pace in terms of dollar volume of sales.
Wow. What about the number of properties sold?
Number of properties sold, we're on pace for an all-time record. There was 1,255 properties sold in New York City in the first quarter of 2014. That's on pace for about 5,020 sales for the year, which would narrowly eclipse the 5,018 properties that sold in 2007. But again, if we keep in mind the fact that the first quarter is usually a muted quarter, we should really be much higher than the 2007 total.
So Bob, the dollar volume, the number of properties sold are both great. How is that affecting the value of properties?
Values are up very significantly as well. If we look at the average price per square foot of properties in New York City in the first quarter of the year, they averaged $444, which is up about 14% from the $389 per square foot they were averaging last year. And we expect that based on the tremendous demand that exists, that we'll continue to see upward pressure exerted on property values.
In terms of value, what submarkets are performing the best?
Well, the Manhattan submarket is just on fire. It's really remarkable. So far in 2014, the average price per foot has been over $1,300, which is 25% above where it was last year.
Any noticeable trends we've seen in the first quarter so far?
Probably the most notable trend we've seen is that increasingly investors are looking to the outer boroughs. Of our statistical sample of 165,000 properties that we track, 17% of them are in Manhattan, and that's the Manhattan submarket south of 96th on the east side, south of 110 on the west side. So in any one year, about 83% of the transactions should occur outside of Manhattan. And we've seen in the good times, in 2005, 6, and 7, the percentage of transactions occurring in the outer boroughs was about 80 to 83%. That shrunk down below 70% during the rough years in 2009, 2010, as investors were seeking quality, safety. They were increasingly looking for Manhattan investments, but now that trend is back to the point where we're seeing 80 to 83% of the transactions happening in the outer boroughs, and that's indicative of a very healthy market. In summary, the investment sales market thus far in 2014 is about as good as it can get. Property values are soaring, and the volume of sales is either approaching or exceeding 2007 peak levels, both in terms of dollar volume and the number of properties sold.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.